Okay, if you've had an eye on the markets lately, you know the big story isn't tech, it isn't AI, it's actually about the oldest money there is. We're talking gold
Yeah.
and silver. Prices aren't just creeping up, they are absolutely smashing all-time records, intraday highs, just unbelievable moves. These classic safe havens are, well, soaring. So for you, our listener, whether you're an investor or just trying to figure out what's going on, the question for this deep dive is pretty basic. Why these metals and why such a violent spike right now?
It's fascinating, isn't it? Because this isn't your typical inflation story or just, standard economic jitters. What our sources are pointing to is a really direct link, almost cause and effect, coming straight out of the mess in Washington, D.C. The main fuse lit under this market explosion, it seems to be deep, deep political uncertainty.
Exactly. And that's our mission today, really, to connect those specific dots for you. We want to show the clear line between this intense political gridlock, I mean, the U.S. government is still shut down, and this sudden, almost frantic scramble for physical precious metals. So we're going to break down the political standoff, look at the resulting safe haven panic, and then, drill into these just staggering price moves and some really weird market anomalies we're seeing.
Okay, so let's start with the fuel, right? The political fire. The market instability is, obviously it's tied directly to the government being shut down, that's clear. But the sources emphasize this isn't just any shutdown. It feels different. It feels more entrenched, systemic almost.
And a big part of what makes it feel so different, reading between the lines here, is the level of sheer distrust. The shutdown itself is bad, obviously. But then President Trump issues an order for permanent layoffs, not just furloughs, permanent. And that single move, according to the analysis we're seeing, has just poisoned the well. It's escalated the distrust between Democrats and Republicans massively. It changes the whole calculation of how long this fight might last, how costly it might be. And, markets hate that kind of deep uncertainty.
Absolutely. It creates this political stalemate where backing down looks really difficult for either side. And that is exactly what systemic risk looks like to a trader. If you look at the demands on the table, the Democrats, they clearly see this funding fight as a moment of, and this is a quote, real leverage. They're not just arguing about budget numbers overall. Their big focus is healthcare, specifically forcing Republicans to extend the Affordable Care Act, the ACA premium subsidies.
Let's just pause on that ACA point for a sec, because premium subsidies, it sounds technical, but it's actually central to the whole political strategy here, isn't it?
Oh, absolutely crucial. These subsidies, they're basically the financial help that allows millions of Americans to afford their health insurance under the ACA. So by tying the government reopening directly to keeping these subsidies funded, the Democrats are making a calculated bet. They think this issue, keeping health care affordable, will hit home with a lot of voters, especially with the midterms coming up next year. It gives them, they believe, maximum political advantage. It turns a budget fight into something much more personal for people. Essential services, their own financial stability.
And you see the political reaction immediately, right? The Republicans pushed back hard. They rejected it pretty much outright, calling it political opportunism. That was the phrase used. The GOP counter-argument, based on our sources, is basically that Democrats are just trying to please their liberal base, a base that's, quote, eager to fight Trump.
So stepping back, what the market sees isn't a normal negotiation. It's looking more like a zero-sum political war. You've got core economic policy, like the ACA funding, basically being held hostage by this gridlock. And it's all amplified by this really dramatic threat of permanent government layoffs. That combination, that's what generates this high-octane systemic uncertainty that markets just fundamentally despise. When political risk feels this extreme, capital looks for shelter. And traditionally, that shelter has been gold.
Yeah, that's a perfect transition to the safe haven surge itself. We've laid out the political why. Now let's look at the market what. The main reason prices are, going sky high seems unambiguously to be this rush into gold and silver as the go-to safe assets amid all this political chaos.
The psychology in the market right now is really something. It's aggressive. These huge daily price swings we're seeing, they suggest what analysts call very mature bull markets. Now, that term itself is kind of a contradiction, right? Mature usually means things are slowing down, maybe nearing a top, but the price action is just violent. It's accelerating.
That's the tension, isn't it? It's fascinating. Normally, with such wild swings, you'd expect some people to start taking profits, maybe step back. But the reports suggest the buying is just so relentless. Potential sellers, the bears, they're basically too scared to step in front of the freight train. That's the analogy used. The momentum is just overpowering everything else. Nobody wants to be caught short when the next record high hits, maybe minutes later.
And what's really interesting is that this demand seems incredibly resilient. even against other market forces. For instance, if you look at the broader picture from the sources, the US dollar index, the DXY, which tracks the dollar against other major currencies, it's actually been strengthening in foreign exchange markets.
Okay, wait. That's important, isn't it? Because usually a stronger dollar makes gold, which is priced in dollars, more expensive for foreign buyers. It often pushes gold prices down. So if gold is rocketing up even while the dollar gets stronger, doesn't that just underline how intense this flight to safety really is?
It absolutely does. It suggests investors are basically ignoring that typical currency relationship. They're prioritizing the perceived safety of the metal itself over the currency it's priced in. They see the political risk in the US as a much bigger deal right now than currency fluctuations. And, alongside this, we see other things happening. Crude oil's up around $59.50 a barrel. The 10-year Treasury yield is at 4.06%. So there are other factors out there, sure, but that political fuse, it's clearly the one burning brightest and driving the specific metals surge.
Okay, let's get into the numbers then, because they really are pretty staggering. This is where you see the political fear translating directly into dollar signs, or rather, record dollar signs. Gold and silver haven't just edged higher. They've completely blown past previous psychological levels.
Starting with gold, yeah, the acceleration is just undeniable. December gold futures, they hit a brand new intraday record high, $424.30 an ounce. Just recently, it was trading around $418, which is up about $118 on the day. That's a huge move. Now, let's talk technicals for a moment, because this is what traders are watching very closely.
Right. What are the key levels now? Where could it go next?
Okay, so for the bulls, the people buying, the big target they're aiming for is a closing price above $4,200. Getting a close above that level, that would be a major signal of sustained momentum, confirming the strength to the wider market. On the other side, for the bears, people betting against it or waiting for a dip, well, they've got a real fight on their hands. To even start signaling that this rally is weakening, they need to push prices back down below the key technical support level, which is around $3,900. Right now, $3,900 looks like the absolute floor they need to break to regain any control.
In silver.
Yeah.
Often called gold's volatile little brother. It's seeing even bigger percentage moves, right? Which often happens when things get tight.
Oh, absolutely. Classic silver behavior in a squeeze. December silver futures also hit a new intraday record, $50.56 an ounce. It was recently trading around 50.275 cents, up over $3. That's a massive daily jump for silver. For the silver bulls, the next big hurdle, the resistance level they need to convincingly close above, is $52.50. The fact that both metals are hitting these kinds of records with this kind of volatility at the same time, it just screams crisis-level safe haven demand.
But maybe the most telling story, the anecdote that really shows the physical reality and the sort of global scramble here, is this weird situation happening with liquidity in the London market. This isn't just about numbers on a screen. It's about actual physical bars of metal.
Yeah, this is where you see the market stress really manifesting in logistics, in arbitrage. It's quite something. What's happening, according to the sources, is you've got historic short-selling pressure in London, meaning real, tangible worries about a lack of physical liquidity. Basically, people are finding it hard to get their hands on the actual silver bars they need when they need them.
And the consequence of that physical squeeze in London.
It's driven the benchmark prices in London to just unprecedented premiums compared to the prices in New York. We're talking a price gap so wide that it creates this huge profit opportunity, but only if you can physically get silver from, say, New York to London really fast.
And this is the kicker, right? The detail that really underlines the panic. To grab that profit, that arbitrage, traders are actually resorting to booking incredibly expensive Atlantic crossing cargo tickets on airplanes specifically for silver bars.
Just think about that. Shipping silver by air freight, that's usually completely uneconomical. Air transport is normally saved for gold because gold is so much more valuable per ounce, per pound. It just doesn't usually make sense to pay air freight costs for bulky silver. So the fact that traders are now willing to pay those massive transport costs just to get silver to London quickly, it shows you just how extreme the disconnect is between paper prices and physical availability. It's literally a high-cost race against time to get physical metal to where the demand and the premium is highest.
And it's not just gold and silver feeling this pressure. We're seeing ripples elsewhere, too, right?
Yeah. The whole precious metals complex is feeling it. Platinum, palladium prices, they're also rising sharply. It suggests this investor flight to safety, and the underlying market tension, it's pretty widespread across the sector.
Right. It's a generalized tension, as you said.
Exactly.
Okay, so let's try and wrap this up, synthesize the whole picture for you, our listener. The main takeaway from all these sources seems crystal clear. There's a direct line here. You've got intense political deadlock in the U.S., fueled by these really strategic fights over things like ACA subsidies and kind of cemented by these threats of permanent layoffs. That political situation is creating genuine fear in the market, and that fear is translating almost instantaneously and quite explosively into record-breaking demand for gold and silver as the ultimate safe haven assets.
And there's a really interesting analytical point that comes out of this, looking forward. It raises a complex question about what happens next, because this market is being described as powerful, yes, but also, crucially, as a mature bull market. That word mature is key. And it creates this tension. From a time perspective, maturity usually suggests that a major market top might actually arrive sooner than you'd expect in a typical long, drawn-out bull run.
Right, but then you have the other side of it. This acceleration phase we're in right now, that freight train analogy again. From purely a price perspective, it suggests that gold and silver might still have a lot more room to run upwards before the buying frenzy finally cools off for a while. So you've got this weird conflict, time suggesting maybe the end is nearer, but price action screaming higher, faster.
It's a real puzzle for anyone involved in these markets, whether you're holding metal or just watching from the sidelines.
And that really leads us perfectly into our final provocative thought for you to consider as you watch this unfold. How long can this kind of price acceleration, driven so heavily by raw political fear and these almost desperate logistical scrambles, how long can it actually be sustained? At one point, does that timing perspective, the fact that this is a mature cycle, finally catch up and overtake the price momentum? When do we see that inevitable, probably sharp correction, that ongoing battle between fear-driven price and underlying cyclical timing? That's likely what's going to define trading in these metals for the next few weeks, maybe months.